traders, day trader Matt here, businesswithtrading.com, and I wanted to do a market analysis. The market has been interesting as of late, and when volatility comes into the market, a lot of people do get scared, which is why volatility rises in the first place. But a ton of money can be made in the markets. So this is basically what I'm looking at right now. First off, let's talk about economic news for Monday. So Monday we have pretty much nothing on the calendar. A lot of European, Canadian news. Nothing really U.S. based. If you go to Tuesday, still not that much. Little news item at 6 a.m. Wednesday, we do have some new CPI data comes out 8:30 a.m. This is Eastern time. Federal budget balance comes out at 2 p.m. Those are the two things to watch. Thursday morning, European news comes out, so that'll be interesting. That should move the market a little bit. Natural gas storage 30-year bond auction kind of is a nothing. But we do have unemployment claims, PPI and core PPI that morning. So that will be interesting. That'll move the market as well, along with the European news. Friday, still a bunch of nothing. We have import prices at 8:30, and then preliminary University of Michigan consumer sentiment and inflation expectations at 10. So that is the news for the week. Now let's get into actual analysis and what we see happening. So as the market did break down, which was pretty interesting, we saw the break. This area, was on the chart, but as far as the red like resistance, I wasn't really looking at that until we came down here. So, but we were looking at the market to break. It was pretty nice and a little bit more of a breakdown than what I was anticipating, but it was very nice to have a trend, have like 20 plus point days, and in the ES, it was very nice. A lot of people were in fear of the coronavirus, different things. The Fed dropped interest rates, which was pretty interesting. It has nothing to do with the coronavirus; those two are mutually exclusive. Um, but that's just because of poor like manufacturing data and different stuff like that is that reason. So what we're looking at, price came down here, did bounce up a little bit, did drop, and then it did have a little bit of a rally at the very end of the week last week. So here's what we're looking at. I have this drawn right here, 2786. You could look up to 2800, 2790. All of those are areas. But if it breaks this, I have this red arrow here, because if it does break, or even a sustained break of this low, should give it an increased chance to break this level. And the support I'm looking for, initial support, is this 2735 down into 2600. That's the initial support. What I think will happen and what I'm anticipating to happen is price to actually move higher into this red area here, which would be resistance. So we have 3173 up to 3216, excuse me. 3173 up to 3216. We do have 3250 above that. So anywhere in there, ideally in this red area, price would come up, chop around, and then start to roll over. That's what I would look for. Of course, we go into every trading day waiting for the market to show its hand, and then we make a trade. We don't make trades based on biases. Looks like the market's going to go up, I'm going to get long. That doesn't really make sense. You have to have a cohesive trading plan, which we do. But this is what I'm looking for to happen. I think the higher probability at this moment is for price to go higher and then roll over. So that's what I'm looking for to happen. If price does get extremely weak, there's not as big of a chance of this happening, but if it does, we want to be prepared. So if it breaks this 2600 level, the next major support below, and when I say breaking, I mean a sustained break. If it just drops below and goes right back up, it can still support. But if it breaks that 2600 level, our next support line is 2240 to 2000. That's pretty wild. So it would be interesting if it actually did occur. Right now, I think the higher probability is it going up, rolling over, and then coming down here somewhere and finding support. But you want to be prepared for everything. And it would be interesting if the market actually did, and it has a smaller chance of even doing this scenario, but if it were to just buy up and go through this and come up higher, it would be also pretty interesting, and things would change. Until that happens, I'm going to look at these two scenarios, and then if the market does actually show that it's doing something else, then we'll have to change what we're looking at. But as of right now, we want to keep in mind that 3173 to 3216 on the upside, maybe as high as 3250, but at the moment just this red area is what I'm looking at. This 3190 area should be pretty large, and then 3200. So those are two lines inside of this red area. On the downside, obviously 2700, 2692 is going to come into play after a break of this 2735, 2730, and then 2600. Really, the line in the sand there. If it breaks down, you could get major trends to the downside. So that's really what I'm looking for. Hopefully you guys do enjoy the analysis. If you enjoy it, click the like button. Always leave comments below if you have any questions. That it's always cool to interact with other people besides talking to myself. So that's always cool. Thanks for watching. Have an awesome trading week. I'll see you in the markets. Thank you.